Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our gold market analysis. In general, in recent performance, we see some bullish and positive sign, but we still have some concern with the current price action. So not mostly because of the mood. The mood is generally positive on the market, not only on the gold, but in other markets as well, and the forex market as well. So you can see that market starts to exclude the excess of the dollar strength from the price. As the dollar heavily was priced in, the value of the dollar have been heavily priced in recent time. The market was scared with the Omicron news, with some spiking in inflation, and recent reports anticipating, and then in the Fed minutes, it's anticipating that the Fed should act more aggressively and faster. Is even 80% now is priced in of the March change, an interest rate. So, but currently, as recent data shows that inflation more or less stands stable, it doesn't make any pressure on the Fed to take more aggressive steps. If we get today more or less positive retail sales, which means that economy stands at some balance, where although inflation stands high, but it does let the economy to show the progress, and it means that the Fed should not or have no reasons to make some aggressive steps, which even could postpone the changing of the rate or cancel it and change the rate in March. So that's what we support. And actually, currently, these type of news are playing on the market. So you can see the probably in the first moment you could be confused with the inflation around 6%, but you see that euro currency, for example, in gold market is climbing higher. That is just because of rebalancing. So because the too much value were priced in, value of the United States dollar were priced in recent quotes of the gold, of the euro. Currently, this excessive value are eliminating and excluding from the price, and that let market show some pullback. But in general, this is time of the searching of some equilibrium, but it doesn't mean that the trend is changing. This mostly has some retracement feature, as on the euro currency, as the gold market as well. So, and taking all together, keeping this in mind, what actually the positive signs would we see, and what is the concern that we have on the gold? The positive sign, so if you will take a look at the recent performance, so for example on the follow time frame chart, you could see that retracement that was suggested has been done, although it's very fast and not quite to the 18 area that was suggested, but some drop here has happened. Market shows fast return. If you take a look at the hourly chart, you will see that it hasn't happened the head and shoulders, which is very positive. The divergence that we have mentioned recently, target has been completed, but take a look in the manner hasn't been completed. It just was minor spike down below these lows, washing into these lows, and return at the cup. So this is definitely not the right arm of the head and shoulders. So, and that carries the positive mood and shows the bullish sentiment in the market, because market actually has erased the chance for the head and shoulders, which looks positive. But what things that we do not like? So on the daily chart, market stands at the resistance. Still the 1830 is a resistance area that has not been broken. By taking a look at the dollar index, so it still stands at daily oversold, which makes hardly possible immediate downward continuation of the dollar. It should take some breath, shows maybe some short-term pullback, wait when the overbought condition will be eliminated. So it just should abandon this uncomfortable territory, because this is a financial market, and financial market feels very uncomfortable in the areas of the overbought and oversold, something like that. So you can see it hits it and then shows the pullback. So it's something that could happen here. So that's the weakness of the United States dollar will be postponed. It also make indirect impact on the gold, that the appreciation of the gold also can't happen, well, freely currently. Finally, if you'll take a look at the 10-year yield, yes, we see some retracement, see some reaction, but acceleration here was very fast. And it means sooner rather than later, but market probably should continue action to the next destination point. It really could happen. And currently, all eyes will be on the statistics. If you will see that the economy is hurting by the high interest rates, well, it probably will be supportive to the call because it postponed the active steps from the Fed, and Fed should be more gentle with the interest rate change because it could hurt even more the fragile economy. If economy will keep strong pace with the good performance of the gross domestic product, retail sales, consumption, production, and inflation will be relatively high or even tending slightly higher, that will be most negative combination for the gold because it just free the hands to the Fed act aggressively without looking back at the economy condition because it shows good pace, and that will be really very negative combination for the gold. That's why currently at this moment mood stands bullish, but this performance and especially an oversold of the dollar makes us think that hardly gold currently is possible for immediate and strong breakout. It could flirting around the top, but would not expect a real breakout. Also take a look here, something like tweezers tops are forming. It's very equal tops here, which is also, well, a bit holding factor for the immediate position taking. So that being said, currently, personally, I feel not very comfortable for taking the position right now in the gold market because I do not see currently the, well, clear potential. But from the technical point of view, if you consider taking position here or you have some own view with your own needs for investing in the gold, just trying to take position in some pullbacks, some retracement, and currently you could keep probably this level as some kind of the short-term signal line for the sentiment because, well, placing the stop somewhere below it, because at the first touch of the confluence probably we will get some bounce that lets you to exit maybe with some with a good result or at least at the break even. So that's what we could advise in the current moment. Nothing else, because currently on an hourly chart we also do not have yet any clear pattern, except that market is just calling around the 1830 resistance. So it means that the overall decision on the trading and on whether you would like to take the position or not stands upon you. We just inform you with our concern and with the tricky moments that we see currently in the gold market.